guys, welcome back to another episode of Singaporean Talks Money. So today I'm going to talk about how I'm going to generate cash flow, building that up for my retirement. So I have been thinking a lot about my stock purchases in this bear market, on how I want my portfolio to be. I have been learning as I see how my portfolio performs in a downturn versus when there was a bull market. It was great when it was a bull market as all-time highs were hit and the numbers just looks amazing. But in a market downturn, you start to have a lot of thoughts and might even doubt why you started. If you read on why I started investing, it was to build up a portfolio that can provide me with cash flow as my capital builds up. As time passed, I saw that US stocks and cryptocurrencies can provide me a better return on my capital, and especially so when I'm relatively young and have a longer runway. However, when 2022 hit and prices nosedive to practically zero, like Luna, I realized that if I want to retire in the future, I will have to slowly rotate out a proportion of investments to put into things that I'll be comfortable with when I'm old, and into assets that either provided guaranteed capital or some form of cash flow. Hence, in the longer term, which is, let's say, more than 5 years from now, I'm considering either putting a sum of money into SIFE REIT Plus or Endower's income portfolio and continuing to build that up as it provides me with a little cash flow towards my retirement. So let's talk about why am I wanting to build a cash flow portfolio. Coming across an article from Investment Mode called The Risk of Planning Retirement with an Accumulator's Mindset, where he wrote about a podcast episode from the Retire with Style series, where the interviewers interviewed Michael Finke. I don't know if I'm pronouncing his name right, but he shared how advisors are usually in an accumulating mindset. As to them, the market goes upwards, and equities will always outperform bonds in the long run. However, the risk for your portfolio should decrease as you grow older and move towards retirement. In his article, he also shared a case study for a couple with $1 million for retirement using the 4% safe withdrawal rate. They lose a portion of their portfolio due to market downturn, and with the higher inflation rate currently as well, using the 4% safe withdrawal rate for retirement planning might not work for them, and they might need to cut down to adjust. I think all in all, this just shows how the 4% safe withdrawal rate might not adjust to the different expectation realities, and with the volatility of the market if the sum is invested in equities. The 4% safe withdrawal rate, however, does take into consideration inflation, and I feel that having some cash flow is helpful in retirement. And he also followed up with another article on the safe withdrawal rate, which you might want to take a look at, as I found it very interesting and helpful. So a dividend paying portfolio can act as a supplement, or even better, fund your retirement if you are able to build up substantial capital. So let's get into the choices I'm considering. So first is SIFE REIT Plus, which I think I came across through one of the ads online, as there were many creators and video sharing on SIFE. SIFE REIT Plus invests in Singapore REITs and provide dividends depending on the REIT's payout. Do note that there are annual fees. The portfolio is focused mainly on Singapore REITs, hence if you would like to have overseas exposure, you might want to also invest in other individual REITs separately. However, the portfolio has about 20 of the largest Singapore REITs, which is great as you can put your money in a diversified Singapore-based REIT portfolio. The dividend yield adjusts yearly as the share prices do fluctuate, meaning your capital could drop or increase in value. Singapore REITs are required to distribute 90% of their income earned, which mostly are from rental income and capital gains when a property is sold. And then they have to return it as dividends to unit holders and investors. I think it's best if you would like more information to read more from SIFE. The other choice that I have is Endowus Income Portfolio, which helps to provide monthly passive payouts while growing or preserving your capital, depending on the portfolio chosen. I won't really talk too much in detail, but there are 3 portfolios that you can invest in. The stable income, which invests in 100% fixed income, and they do categorize it for retirees as capital preservation, and there are also regular payouts. Next will be the higher income portfolio, which invests in 20% equities and 80% fixed income. This is more for a higher payout. And then the other portfolio is the future income, which has 40% in equities and 60% in fixed income. This brings more capital growth and lower payouts as equities generally perform better over the long run. So Endowus also shows the equities breakdown, namely in companies or markets and sectors. For the fixed income, there is also a breakdown of the different funds or bonds. They also do a deep dive into each portfolio, showing the historical performance and risk involved, as well as who it is generally suited for. Most importantly, your capital is not guaranteed, and you can end up with a lower amount due to the fluctuation of the stocks and funds. The payout is also not guaranteed as well. They do also show the recent Q1 and Q2 performance of the portfolio. So let's talk about which am I leaning more towards. I'm leaning more towards Endowus higher income portfolio, as I know that I'm accumulating this for retirement and do want a higher payout. I did share my plans on Seedly and got a few responses in return. One of the comments mentioned that since I'm still young, I should get in at a later time and instead focus on building up my capital before aiming to achieve income investing, as he finds that a smaller dividend might not prove to be efficient, as there are other opportunities to grow the capital first. I do slightly agree with that, although I think we can also slowly build up funds as time passes. SIFE REIT Plus and the Endowus Income Portfolio are 2 vastly different portfolios that invest in different things, so they actually should not really be compared side by side. Of course, this is something I'm planning in the time to come, and it's not something that I'm thinking of getting in right now. But as with investing, time in the market beats timing the market. And with the limited cash flow from my main income currently, I like to build up on my stocks or ETF portfolio and cryptocurrency before plunging into a dividend or cash flow portfolio. Or maybe once I have substantial profits before I will go in. If you do have anything to share with me, do email or comment here, although I might take some time to look at it, but I'll definitely check on it. So far, there are many interesting products that are being offered, from robo-advisors to funds. So I hope that you guys learn something new, and do remember to subscribe, like, and share my content if you find it helpful. Thank you.